Hi and welcome. Let's discuss a multiple choice question on comparative financial statements. If the auditor becomes aware of a possible material misstatement in the comparative financial statements while performing the current period audit, the auditor should do what? Now, what are comparative financial statements? Comparative financial statements are a complete set of financial statements, complete set of financial statements for one or more prior periods and is presented for comparison with current period financial statements. For example, you are the auditor, you are auditing the financial statements for year 8. Management is presenting year 8 financial statements along with year 7 financial statements and year 6 financial statements. So year 6 financial statements and year 7 financial statements are also presented with year 8 financial statements. Now year 6 and year 7. These two are comparative financial statements. Complete set of financial statements for one or more prior periods that are presented with the current period financial statements for comparison purpose. So year 6 and year 7 financial statements are comparative financial statements when they are presented with year 8 financial statements for comparison purpose. Now what the question is asking, if the auditor becomes aware of a possible material misstatement in the comparative financial statements, we are talking about year 6 and year 7 financial statements. So a possible material misstatement in year 6 or year 7 financial statements while performing the current period audit, while performing year 8 audit, what should the auditor do? What you should do? You are the auditor and you are auditing year 8 financial statements and you have identified a possible material misstatement in, for example, year 7 financial statements. What would you do? You have 4 answer options. Answer option A, withdraw from the engagement. Would you withdraw? Would you really withdraw from the engagement? Not really. You would not withdraw from the engagement because there is a possible material misstatement in year 7 financial statements. You would not withdraw. Let's see answer option B. Modify your opinion on the current period financial statements. So you are the auditor for year 8 financial statements. You identify a possible material misstatement in year 7 financial statements. Would this result in modification of your opinion on year 8 financial statements? Answer is no. This is just a possible material misstatement in prior period financial statements. This will not cause you to modify your opinion on the current period financial statements. You would not do that. Answer option C. Perform additional audit procedures to determine whether a material misstatement exists. Because this is a possible material misstatement, you want to be reasonably sure that this is a material misstatement. And for that, you have to perform additional audit procedures so that you have sufficient appropriate audit evidence, so that you may conclude that it is a material misstatement. So you need to be reasonably sure. You need to have sufficient appropriate audit evidence. And for that, you have to perform more audit procedures. Yes, this you would do. Answer option D. Revise the comparative financial statements. First thing is that revising the financial statements is not your job. It's the job of management. Management would revise if needed. So if there is any revision required, that has to be done by management. You won't do that revision. You will only suggest that revision to management, that this change is required in the financial statement. This correction is required in the financial statement. This adjustment is required in the financial statement. You will only advise management. And management has to make the required changes. Management has to make the required revision, not you. And also, as of now, it is just a possible material misstatement. You are not sure that there is a material misstatement. Question is that whether there is really a need to revise the financial statements, you're not sure. You will come to know only when you perform more procedures and get evidences that whether there in fact is a material misstatement or not. So you would certainly not revise the comparative financial statements. So this is not your answer. So your answer is C. You would perform more audit procedures so that you may be reasonably sure and you have more evidences. You have sufficient appropriate audit evidences to determine whether actually there is a material misstatement. All right, students, I hope this is helpful. We'll connect again. Goodbye.